Good morning, everybody. Happy Wednesday. Welcome to the morning show. This is Stock Market TV. Spencer, Steve, Alfonso, no JC today. I think for the rest of the week. I don't know. He might call in. We'll see. But we got a lot to talk about. It's probably good that he's not here because we got a lot of things that are like headline things that are worth discussing, right? We have kind of the kickoff of earnings season here. We got the banks all reporting. Well, most of them reporting. So we got to talk about that. We had the CPI number just come out. We'll probably hit on that. I know Steve has a bunch of failed breakouts he wants to talk about, so we'll talk about that. We have Kenny Glick on the show. We have Sean McLaughlin on the show, and we'll have Shane Murphy on the show from Murphy Charts. So we got a lot going on today. Look, if JC calls in, he calls in. If he doesn't, I don't know. So we, like I said, a lot going on. Busy show, busy news morning. Right, got a lot of headlines here. So let's get this show on the road here. Drop me a like. What up, chat? Here we go. Hey,
yo,
what's up?
So I got my JPMorgan asset management Nike dry fit on.
Yes.
Shout out JPMorgan, kicking off first earnings season of the year on a solid note. Dude, the way this company beats the bottom line for how big they are is just, it's impressive. I feel like every time too.
All of these companies are very good at making sure that their earnings per share and their revenue come in above the estimate, right? If you go look at here, I'm looking at the calendar right now.
The bigger the better.
I'm going back 10 years here.
They don't miss. They don't miss.
More often than not. The only bank that like kind of missed with like somewhat regularity for a while there was Wells Fargo, but like JPMorgan, Goldman Sachs, Citigroup, I've got BlackRock in here, and yeah, there's like the occasional surprise to the downside, but like 8.5, 9 times out of 10, these companies are coming above the estimate, right? So it's not news that they beat the estimate. They all always beat the estimate, right? And that's what happened this morning, right? With the exception of Wells Fargo on the revenue. So
you can't say that about Citigroup though.
Yeah, you can.
They don't always beat. I remember a time when they always missed.
Well, nobody always beats, but they beat a lot.
JPMorgan always beats. They don't miss. So how do you want to do this, Spencer? We got a lot to talk about here today. You want to just hit state of the markets? I'll share a couple thoughts and charts, and then we go straight to bank earnings.
Yeah, let's do that.
Don't want to miss the bank earnings. BlackRock too. And there's some real price action around this. So we'll dive in.
Yeah, not so much like pre-market price action, right? But just overall price action, right? A lot of things to talk about if you just zoom out. So let's do state of the markets first. See, I know you have some charts on your mind, and then we'll rip through these earnings reports. How about that?
Sure.
Cool. What do you got?
I'm working on a new setup here.
A new setup, like in your office?
All right, here we go. Here we go. All right. Okay, so nat gas up about 3.5% on the day. Dollar index flat, but two red candles so far this week on dollar index futures. That stands out. Silver's up again today slightly. Dollar yen lower. VIX slightly lower. NASDAQ up 0.08%. CAD, Aussie all higher today. S&P up slightly. Ethereum's up 1.4%. S&P futures up about 0.40%. Copper higher. Commodities looking good out here.
Yeah.
Gold higher.
They've been looking good. We talked about Jason and JC discussed that yesterday.
Dow futures 0.5%. So So this will be 3 straight green candles. We had a nice little shake. And now we're baking here. We talked about these bearish coils, Spencer. We now have failed them and booked a really solid follow-through day higher. And today will be the second follow-through day. Some of them are now ready to resolve to the upside, right? Those same little flags that look like they were breaking lower, now we're taking out the upper bound. So you're getting that classic failed move, fast move theme across the market right now. Bitcoin's another one that you would throw in that category. Up almost 2% here this morning. Huge wick Monday. So Monday's candle in the Bitcoin, do we have a chart? Because it's so good. Monday's candle in the Bitcoin shook lower, tested its lowest level since November, right? Rockets higher, didn't stay down there very long, fails that little top, 2 days of follow through. So that's the theme right now. Really, really positive price action, failing these bearish patterns with authority, following through higher. And then you have this massive earnings season catalyst just kicking off. Not to mention, are you even going to say CPI? I was pulling off you when you were doing your intro, but
yeah. I mean, I didn't say what the number was yet.
What's going on?
Yeah, like I said, busy morning on the headline front. CPI out a few minutes ago. I'll read you that number. Year over year, 2.9%. That is exactly in line with the estimate. Core was 3.2% for December. That was 3.3% was the year over year estimate for that. So a little bit light on the core CPI, which I suppose is a good thing. But yeah, I mean, it's been a pretty stable. It's gone back to being like a stable number, right? It was pretty unstable there for like a year and a half.
It's stable for you?
CPI?
Mm-hmm.
Yeah. No, it's not.
You like it. You like it here. This is your level.
Doesn't everyone like it here? Isn't that the whole point? Like
Marty likes it here.
2 to 4%, right?
The price of milk and bacon is still ridiculous in my mind, but the market likes it. I'm happy about
that.
That.
I mean, the more time goes by, the more I do sort of fall into the conspiracy theory that like CPI is just a made up number. Because inflation is personal to all of us. Yeah, eggs are extreme right now, right?
We thought we got $5 carton this weekend. We were ecstatic. We brought it up to the register. It was mislabeled.
Yeah, eggs are nuts right now. And we eat a lot of eggs. I eat a lot of eggs, so I'm feeling that one for sure. Anyway,
getting a lot of shout outs lately. Yeah.
Wait, who is what?
I don't know. Okay. Yeah. Hearing so much about this guy. Everybody's talking about him. Can he come on the show? I don't know who he is.
I don't know him either. Who asked? One hole. This is Fibonacci is on my shirt.
Yeah, that's the man.
Yeah,
the great one.
Fibonacci. Okay. So anyway, yeah, CPI was in line. Whatever.
And what is the bond market doing?
Actually, I've been a little busy. I haven't looked yet. Let's see.
Getting smacked here. Rates are down 2%. Yeah. Kind of like it. So we talked about how, so TLT is going to be up 1% here at the open. We've talked about how the correlation between stocks and bonds has been like airtight over the short to intermediate term. So rates coming off, thank you CPI, I guess, it's fantastic. Also, banks coming out reporting big numbers as rates come off. Kind of like that setup. Hard not to love that. Look at the pattern. Can we throw up the KRE? Can we just skip right to it?
Yeah.
So good. We talk about how you really want to shake out with your breakout. Why? You want to test the bearish waters. You want to give the sellers a shot, right? Really see what they got. And then you get patterns like this where they explore the downside. It looks like you're getting a breakdown. Friday, you looked at this chart. It was awful. I was writing about it. Terrible. I'm like, wow, maybe they broke the banks. Rockets higher, doesn't spend more than a day down there, right? Fails this little bear flag. Boom, back up in the box, taking out a key level. Now it's actually resolving higher. I think next stop, 70, those pivot highs, and then some. So I don't know if there's a better looking area than the banks right now. This price action over the short term is just so awesome. And I love the earnings catalyst coming up. And I love interest rates maybe rolling over here and following dollars lower. So I think all of that works for the banks right now. You can start to look at the banks and be like, oh, they've held up pretty well, despite what rates have done. Now rates are coming off. What are they going to do? As they beat earnings. It's a good setup.
You want to go?
Out?
You want to talk about some individual names?
Yeah, we got some charts.
We start here. Might as well start with the bellwether. Not the bellwether. Not a bellwether per se, but just the largest one, right?
It's the bellwether.
Is it? Okay. Anyway. Okay, beat on the top line, beat on the bottom line. Like I said, no real surprise there. That happens all the time. How about this? iBanking fees up 49% year over year. 20% year over year increase in fixed income trading. Actually, trading as a whole was good for them. The trading gains helped offset obviously a decline in net interest income was as rates come down. They make less money, so no real surprise there. They did guide. Let's see what they guided. They guided net interest income of about $90 billion for the year, which would be down from $92 billion last year. That's pretty much that's the story. JPMorgan of all of them.
What was the net interest margin?
Net interest. Net interest income. X markets fell 3%, so $23.5 billion. And JPMorgan did it beat? Did it beat? Good question. I don't have an estimate for that. Their trading beat. The trading was nice. Fixed sales and trading, $5 billion versus a $4.3 billion estimate. So that was a nice beat. They said, let's see, loan loss provisions, $2.6 billion, which was below what the street thought it would be.
They're tight on that.
Yep. That's pretty, JPMorgan of all of them this morning was having the most muted reaction. For a hot minute there, I think it went red. It's not. It's still up, but not by a lot.
BlackRock.
Let's go to BlackRock. Kind of the same story. I have my BlackRock numbers here. It was a beat and a beat. I didn't see. Oh yeah. The inflows on BlackRock are insane. Okay, so check this out. And we say this every quarter, and every quarter it sort of blows my face off a little bit more, right? But they are up to, what is it, like $12 billion? So sorry, $12 trillion in assets under management. It's just insane. I can't even fathom that number, really. $12 trillion in assets. I'm trying to find my BlackRock.
Look at this chart. This is the same thing we've been talking about since last week. Failed breakdown, right? Slices right back below those prior cycle highs from 2021. Looks scary for a day or two. Boom, rocketing higher on a huge earnings beat. That's awesome. Things going back to those pivot highs, and then some. Yeah, these trades are very clearly defined here, right? With these little failures, these little shake and bake moves, these little scoop and scores, right? You just define your risk right at the lower bounds, right? The little breakdown level, once it fails, reclaims it, boom, that's where you're out. Something like BlackRock, you couldn't ask for a better risk reward setup.
Yeah, I am still long and strong BlackRock.
Love it.
Yeah, BlackRock.
This is one I think you could put in, like, some people have like a forever portfolio. It really just means like for long term.
Yeah.
These guys are just so good.
So BlackRock's AUM is at $11.5 trillion, up 15% year over year. Inflows for the quarter of $281 billion, which only beat the estimate by $100 billion. No big deal.
Wow.
Long-term net inflows, $200 billion.
Though, right? The reason why they keep having these massive beats, isn't a lot of this being driven by the IBIT?
I would assume that was my first assumption, right?
IBIT's like breaking records every other day.
Yeah, IBIT took in as much money in its first year as like all of the gold ETFs took in their first like 15 years, I think, or some crazy stat like that, right? It was nuts.
If you told Larry Fink, Spencer, a couple years ago that BlackRock would be a Bitcoin stock, what do you think he would have said? I
think he would even today disagree with that characterization, but certainly it's not hurting their business.
Everybody's in, is my point.
Not hurting the business. Citigroup is the stock is the bank stock up the most this morning, and they're the only bank that I saw that announced a buyback. So
yeah, but weaker numbers. And you know what's interesting about this one? That's great, and it's all about the shareholder return. That trumps everything else. For companies like the banks, that's the biggest thing to pay attention to. And look out for that to get really juiced, buybacks and dividends, as they deregulate them this year. Thank God. So Citigroup, though, what I found interesting in this one is they slashed their return on equity forecasts for like full year and 2026, which not great. And the stock's rallying. I don't know.
we love a buyback, right? So it's not even a big one. It's $20 billion. It's not even a big buyback, right?
$20 billion is not a small buyback. That's not like,
yeah, I know.
Scoffing at. That's
yeah,
it's huge. The percentage of their market cap. What are you talking about? 20 billion? What do you think Citigroup is?
You're actually that's a good point.
You're right. You're right. Citicorp?
I guess my perspective is skewed because we're not talking about a $1 trillion company here, right? So you're right. It is a bank after all.
Sam Gatlin in the chat asks, "Are you buying back your soul, Steve?" I don't know. Well, are you buying back your quantum computing stocks? I'm buying soul back above the VWAP from the pivot highs.
You know what's funny about those quantum stocks is I come in this morning. Oh my god, quantum qubit is up 20%. Yeah. QBTS up 25. Oh wait, no, it's up. It's up. It's up $1. It's up 80. It's up 80 cents. It's up $1. Right? It's like you gotta look. Sometimes the percentages don't tell a story, right? It's the absolute value of that move.
Charts like that, Spencer, they had a hole blown in them.
Yeah.
You know, when you get rocked 50% in a day, it's not easy to repair that damage.
No.
You gotta kind of wait and see on those for now. So I did buy 3 other cryptos yesterday.
Oh boy.
I would love to share.
Okay.
Can I share?
You are free to. It's a free country.
And this is kind of the strategy right now. With the way we are scooping and scoring, repairing this damage, rocketing higher over the past couple of days here, I just, dumped a huge amount of my overall investment or trading exposure, which was Solana. So I got to get re-involved in something is where my head's at. So there's 3 coils that I've been watching, already in all of these, but I'm not in them enough. And when I look at these charts each and every day, I'm thinking that more and more. So this is the algo, the H bar, and the ripple.
Oh boy.
Notice they all look similar.
Do we have any of these charts, Fonz, somewhere?
I got them.
Oh, you got them? Okay.
Yeah.
Mystery charts.
Be patient. You own the ripple, Spencer?
No. I had to think about that for a second. No, I don't.
I'm not even going to draw the coils because they're just so obvious. You could just see them. Here you go. Charting on the fly here. Okay. All of these skyrocketed going into and following the election. These were like some of the top cryptos to own. And then just high and tight here. These sweet coils setting up. Some of them are at like key levels when you zoom out, years, like Ripple. Other ones, if you zoom out, you're like, whoa, look at those record highs from the last cycle. Imagine if we go back there, like Algo. H-bar is like this crazy cult one. My cousin's texting me about it. People are always talking about the H-bar. Seems strange. These are all like kind of cultish, right? The Ripple too. You ever meet a Ripple person?
I've never met any of these people.
I've gone to like a Ripple party during a crypto bull market. Bro.
All that is wait, they're all the same. All that is people who happened to buy a long time ago. That's all.
They're like chiropractors and dentists. Weird shit. But anyway, these communities, these are like community-driven tokens, I think. Something going on here. Anyway, they're old cycle tokens. They're legacy tokens. Right? Ripple was like popular 10 years ago. Yeah. Anyway, we're high and tight in these coils. They're starting to go. Ripple's kicking it off. Ripple's already going. I think H-bar and Algo follow. They look very similar.
Okay.
Added to all 3 of these. You like it? You don't like it? What?
I like any trade where you have a very obvious out, right? Where like it's clear when you're wrong, right? So these all like you call them coils, to me they look just like sideways trends, but the low of that is your out, right? It's very obvious. So I like all three of them for that reason and that reason alone. Now, would I buy any of these? I don't. I mean, yeah, I guess in theory I would. I don't. Like I said, I don't own any of these. I haven't bought any non-meme crypto in a hot minute.
Spencer, is there a reason why you don't own the Ripple?
I don't spend a ton of time looking at crypto charts, right? Like I look at the charts that Louis sends out, right? And Louis has been running a lot about Bitcoin lately, so I look at a lot of like Bitcoin charts. I don't really go too far down the crypto rabbit hole, with the exception of the meme coin portfolio, obviously, right? So it's a whole separate ballgame. But that doesn't have any thought behind it. That's just gambling. So no, I don't have a reason.
You're not like Louis, like he's like a never Ripple person.
I don't have any opinions on any cryptocurrency as it relates to like anything beyond the chart, right? I don't know how else you would. I don't know the fundamentals of anything. Right?
Per Ingverson in the chat, he knows what I'm talking about. There's all these crazy stories. Yeah, that's the stuff I'm talking about. The Ripples. It's the future. It's one of those. They're all the future.
They're all. Yeah. Okay. Wonderful. Great.
Do we have Kenny today?
We have Kenny. What I'm sure has been a busy morning for Kenny is in all his glory right now. This is what he lives for. He lives for mornings like today. You have like earnings. 5 or 6 big time earnings reports coming out at pretty much the exact same time. I'm sure he was at his desk early. I'm sure he's been trading for an hour or so. Let's see what he's up to.
Didn't Kenny?
It's been a long time coming. They ain't come from my club, they tug it. Putting up numbers, 99 pounds, and I still kept it 100. Hola. Yeah.
All right, Kenny. What do you got for us?
Would you believe it's just a biotech stock breaking 52-week highs and all-time highs?
Not.
I know.
That's not what you're supposed to do today.
It's supposed to be JPMorgan, Goldman Sachs, Citibank, BlackRock. But it's OSTX right now. OSTX. I love biotech stocks that break all-time highs. They got a cancer breakthrough. I have a friend that knows about this name, so we've been trading it so far. Here's the thing, kids. Okay. Everything's going up. The market never goes down. We had 2 days of selling. Everybody started writing new theses of the market and blah, 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 the January effect. And next thing you know, you snap your fingers, UVXY is crashing, there's no volatility, and we're back to all-time highs. That's what's going to happen. But I'm staying focused. Again, other than this OSTX right now, it's trying to break $7. More importantly, I'm looking to play the fade. And the fade worked yesterday on KBH. If you guys were shorting that with me from the morning session, beautiful trade. That's what it's all about, just playing the fade. But right now, the market had a sell-off. We came in with the gap. Normally, I'm a seller of this gap, so I'm going to sit back and I'm going to wait. And I'm going to wait to see if there's going to be some selling. And right now, there is no selling. So I'm just going to, like I said, chill out. Yesterday was an amazing day. We played the chop. You couldn't have played it more perfectly. Those 3-point rips on the Qs, 0-date options are our best friend. Yesterday, we had it going into the close, nickel, dime, quarter. And next thing you know, we're banging them out at $1 and $2 and $2.50. It was pretty amazing. So the market is just giving us opportunity on a daily basis. But, going back to the magic, I mean, right now, everything's gapped up. So I have to sit back and I have to wait for the setup to form. And
not everything is gapped. JPMorgan's not gapped up, right?
Well, you've already had some selling and a comeback in JPMorgan. Same thing. You had a little bit of selling before the economic data hit. And now you have got right back to highs. So, most of the time you do get a fade. But I'd be a little bit afraid right now to make sure you're just playing the fade. So if you get that KBH move like we did yesterday, and again, listen, you could have shorted KBH a couple of different times. Hang on. We got big size on the offer on OSTX. If it breaks 7, we should be good for another leg up here.
What is the float here? I'm afraid to even ask.
I have no idea.
I'm gonna look it up.
I just like when there's big volume on these things, and this is not a lot of volume. This is only 9 million shares. Trading. If you've been watching the volume in rigatoni, you're doing 100 mil sometimes before the open. It's insane.
I don't even have float data on this. That's how average session volume is
fairly new stock, actually. Yeah,
50 average session volume 59,000. Oh dear Lord! All right, well it's already way above that today. What is
it's gonna trade the whole float, I'm sure.
Lordy, dear Lord, this is scary. Okay, not what I thought you'd say. I thought you'd be getting down dirty, and at the very least, Kenny, your quantum stocks, like we said a few minutes ago, they're up yesterday. They're up again this morning.
Yeah. And again, listen, guys, the bounce started Monday in the aftermarket, and that's where they made the turn. They got a slight gap yesterday, and then they gap and go. So far, you got a gap and go again. I don't buy into the gap and go. So a lot of times I'm just sitting here just jealous, but jealousy is not a reason to trade. That's called revenge trading, and usually backfires.
Good tip.
Again, I'm going to focus on the banks. I'm going to stick with the JPMorgans, the Goldman Sachs, Citibank, BlackRock. Keep an eye on those. If they do roll over, and again, right now, there's no sign that they're actually going to pull back. But again, at 9:30, everything changes. So between 9:30 and 10:30, I'm going to look for some reversals, and then I got to hit the road. So it's going to be an early day for me. And again, I'm not going to push too many trades.
Are you going on Yahoo Finance today?
Yeah, we're going on Yahoo Finance.
What time is that?
Should be around 1:45, but they're not going to release it for 2 weeks. So
2 weeks.
2 weeks.
That might as well be.
I'll be a dinosaur, right?
That's 400 trades from now.
I know. Well, we have to go recap when I told people about RR and rigatoni when no one heard of these stocks. So I gotta go in there for my round of applause.
That is the thing. You can always count on Kenny to bring you the viral stock in like the first inning of the virality. Always. Kenny brought me Nikola when it was still when it was still a SPAC. Pre-Nikola, it was still a SPAC. I hadn't even converted yet.
A SPAC. I didn't even know. I was in that space stock, which was a SPAC, and then next thing you know, that became the hottest thing.
It hadn't even converted to Nikola yet. It was still whatever the crazy ticker was, and it was already going nuts. And Kenny was all over it. So that was early days, but yeah, you can always count on that. So, guys, hit thebid.com. Days like today and days like the next 2 to 3 weeks, basically, are what Kenny lives for, and you'll be going hard. Right, these next.
Yep, yeah, we're gonna do some aftermarket sessions also. So stay tuned. We're gonna probably invite people into the room. We're doing some schmoozes now. So Thursday nights we'll get back to doing that. And I'll just show you how to plot these charts, and then it's just sitting and waiting, and you're more or less a fisherman.
If you actually want to trade this stuff, this is the guy to watch. Like Steve and I are not trading JPMorgan earnings at 8 in the morning, right?
Right.
Kenny is getting down dirty. So
that's the fun part.
Like we'll talk about it. And we'll talk about it, in the context of the larger trend. But you want to actually trade this stuff, this is the guy. Kenny, good luck. I know you don't need good luck, so I'm not going to say good luck. But we'll see you. No, we won't see you tomorrow. I'm not doing a show tomorrow.
Okay.
So we'll see you on Friday, and I'll watch you on the tape, I guess, on this OSTX tape.
Cool, man, guys. Be careful out there. This market's just incredibly strong still. Be careful, my shorter friends. Later.
Be careful of a strong market. Only Kenny can say that. Only Kenny. Be careful. Market's strong. Be careful.
It's dicey out there. I really like this JPMorgan hat. I've never worn it before. I'm going to start wearing it for golf. Shout out JPMorgan with the conference swag. Good gear.
I have the only swag that I have, and I'll never get rid of it. I have a Binance tote bag that I actually use because in New Jersey, plastic shopping bags are illegal, which is insane, but it is what it is. So I have to bring my own bags to the store when I go food shopping, and I use my Binance bag every single time. And not once has anyone said anything to me, but one day someone's going to say, "Hey, where'd you get that bag?" And I'm going to tell them. I got a conference.
We haven't bought a beach bag in years. We just use the ones from the conferences. Yeah, they're so good, especially like at Future Proof because like beach themed. The amount of beach bags I have from all these different financial services companies, they're good.
All right, we got Shane Murphy in the house.
Throw up the Solana chart. We didn't share it before to wrap up that conversation.
Yeah. What happened to that chart? I never saw it.
Just throw it up quick.
Where are we? Oh, there we are.
So just like everything else, failing it, obviously, right? We talked about this. Drop my post in again. Go all the way to the end. Read what I said at the end. How I hope I'm wrong, right? Because if Solana's breaking down, what does that mean for everything else that I own? All of our longs. Probably not good. Solana's failing it just like everything else. But at this point, I want to see it. Let's get back above that all-time high VWAP. Let's get back out of this box, right? The coils I bought yesterday look a lot better than this. So Solana's got some catch up to do. We'll see it. We'll be back in the 200s, and I'll be back in. But I'm not going to be as big as I was because that leadership is just not there. If you look at Solana versus its peers, Bitcoin is looking like a top, right? We'll see what happens if there's a little shake move there. Not sure. But the Solana Bitcoin ratio looks like a big distribution pattern. It can't even break out versus Ethereum, right? So it's lost that relative strength for now.
For now.
Mm-hmm.
The thing about crypto is there's always a leader somewhere, right? You just got to look for it sometimes. You got to dig deep if you want to find that lead, but there's always a leader.
Ooh.
Maybe not always, usually. I don't know. All right, let's bring on Shane Murphy.
Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
Shane Murphy.
Steve, Spencer, how's it going?
How are you? It's been a long time, man.
It's been too long. It's been too long. A lot of things, a lot of good things happening in Syracuse, New York. But how are you both? How are things?
Are you buried in snow up there?
We are. We got crushed these last few weeks, and temperatures are staying cold. So, yeah, the roads aren't great, but we're making do.
You got a good snowblower? What's your system? No.
My system is the old school shovel, Steve.
No.
Yeah.
They got to have physical robots for this, like soon. The stuff I'm hearing, they should.
They should. All that lake effect from up north that just gets dumped on us.
No, but yeah.
Yeah, but I'm thinking about the winter sports enthusiast. I have a lot of friends who snowmobile, ski, and these last few years, we have not had great winters. They've been, not a lot of snow. So I'm thinking of them this year. I'm trying to stay positive and, let them have their winter.
My brother does that. He'll wait for a snowstorm and then travel to the destination where the storm is happening. Some of these people are, it's anyway.
Right. I just found out that just how many snowmobile trails in upstate New York, you could travel across the state, intrastate.
Cool.
A lot of folks, they'll go out for a few days at a time and just travel across the state.
Do you get involved? Do you ride snowmobiles? That's something I would do.
No, I stay away from it. I've heard of bikes going up to 100, 130 miles per hour.
Yeah.
Oh God, no.
Here's the thing about snowmobiling, which is the case with a lot of these things. It's a bad risk reward. It's hard. They have these scooters here, these island scooters. They go 35 miles an hour. I don't even want to do that. Bad risk reward. Everybody's crashing them, hurting themselves. It's just, as market people,
Absolutely.
I don't want to break a leg skiing.
Absolutely. I'm the same way. I tried skiing. I was always told growing up, because I played hockey, that should translate to being a really, well-rounded skier.
It does. It should.
Well, it should in theory. Well, I'll tell you what, Spencer, I got out there and I'm just,
You know what? I'm the opposite, because I grew up skiing. I never quite got the hang of the hockey stop. It's the same exact motion, but couldn't quite translate to the ice. But so yeah, I hear you. Shane, what's on your mind here?
Yeah, I mean, a lot of interesting, I guess, developments in the market. The one that I was looking at last night was really just perceived tail risk by evaluating the skew index. And now the skew index,
explain that.
Yeah, gets a lot of, there's a lot of papers online speaking to its lack of predictability and how it isn't a perfectly constructed index. But I like to review it to really understand the implied probability of a big or large downside move in the broader market.
Just explain to a 5-year-old, what is it?
Yeah, so just real high level, the skew index is going to use out of the money options, and we're going to determine the slope, of the implied volatility. So in other words, a high level, a high reading from skew would mean that the probability of a 2 or 3 standard deviation move over the next 30 days to the downside is heightened. So if skew is at $100, right, or 100 index level, and we assume a normal distribution, there would really only be a 3 or 4% chance that we witness a 2 standard deviation move below the mean. But right now we are at record highs for the index, which would be indicative of market participants expecting there to be a higher level chance for there to be a significant downward move. So, not predictive in nature, but I think this speaks to the level of uncertainty in the market and how there's a lot of conflicting data points out there. How this resolves, that's anyone's guess, but certainly high levels of uncertainty in the market currently.
It's interesting. I haven't seen somebody talk about this in so long, Shane.
Right. It doesn't get talked about a lot. I know there are a few great papers that have back-tested strategies using it and really came up with the conclusion that it doesn't hold much predictive value. But that's not the way I use it. It's more of a tool to help me confirm the environment that we're in. I like to overlay this with sentiment, with the VIX reading. It's just more information that helps us make better informed decisions.
Well, if they said it in a white paper, Shane, it must be true.
Right. Sometimes those papers can feel very much data mined, but it's what the community is about, right? If there is another way to view it, I would suggest that individual draft a paper and then publish it so that we could learn a bit more about it. But I don't like to look at this index as a predictive tool. It's more of a way to gauge that level of perceived tail risk and uncertainty in the market.
No, I like it. What do you got here on this next chart?
Yeah, I believe I shared the industrials. Yeah, so industrials are really interesting right now, guys, at really all cap sizes. So large caps, on an absolute basis, we're above an upward sloping 200-day average. On a relative basis, we are at the lower end of a multi-year range relative to the S&P 500. And industrials are really part of that broader infrastructure megatrend. So we're seeing names across the different cap sizes that are continuing to uptrend. And, these trends can persist for a lot longer than most investors, think they can. So industrials continue to be an area of focus for us.
Is this one of those sectors, though, where that's always the case? Where, you just tend to see the small and it's like the opposite of technology. It's like whenever technology is working, look at the biggest ones. Right. With industrials, there's all of these small and mid-cap names. I feel like building materials. There's certain groups that just lend themselves to maybe smaller or mid-sized companies working better.
Right. That's an interesting point, Steve. I mean, if we look back the last 20, 25 years, I would say that is certainly the case. I'm not sure if we extend back further, if anything would run counter to that. But it's an interesting sector group and one that I think that active managers, there's a lot of index products out there and really low cost products and ways to gain exposure to the industry or to the sector. So there's really interesting ways to pinpoint those areas within industrials that we really like, sub-industry groups, industry groups, etc. But really getting back to that broader infrastructure megatrend, that's what interests us, right? These companies are, growing earnings at a pretty decent clip, and that's really expected to continue. And so far, a lot of that has materialized. So a lot of enthusiasm and optimism around that trend.
Now they've come out with infrastructure themed ETFs. Are there any that you watch or or that you use just from an information standpoint? I'm trying to search for them now.
I won't get into any specific products, but there are a handful of infrastructure, both U.S. focused and globally focused.
Yeah.
I know iShares has a product.
I'm looking at it.
Right. They're well constructed. I would say that make sure to understand what you're buying, right? Some of these infrastructure ETFs, they maintain a lot of utilities exposure, just given the nature of the trend. So when you look under the hood of these various ETFs, some are very, very overweight industrials, 60, 70% industrial sector stocks. And then others have a lot more utilities. Thinking of like a Constellations, Energy Corp, names that are going to give you more exposure to the broader, utility sector. So I would just say make sure to understand what you're buying before, moving forward with a product like that.
This chart is insane.
It really is. I mean, if you were a small cap manager in 2024 and you were underweight industrials, it was a hard environment for you to keep up. Industrials have been that shining sector within the small cap group.
I was going to say, if you can bring up the next slide, Fonz. This is from our daily ETF note that Louis sends out. If I'll drop the link in the chat in a second, but the first thing that jumped out to me was like really, and Louis does a series of he does different scans every day, but for every sector scan every single week, like the small caps are usually at the bottom of this scan, right? Except for industrials.
Yeah,
right?
But it's always like that, it seems like.
Yeah, right. I was going to say industrials, utilities, financials have all been pretty good of late. Industrials is the leader. So yeah, that's the kind of the one thing I know about small caps is that recently industrials, for whatever reason, have been the outlier. But I don't know why.
Something in the water. Here's the iShares infrastructure. iShares infra. This base is huge. This has been around forever. Shane, I didn't know that. This has been around since the financial crisis.
Right. And it's
IGF.
As far as picking up investor interest, retail interest, these are areas. This is a fund, for instance. So this is looking at the global infrastructure. So you're going to have names outside of the U.S., but just attracting a lot of retail interest. And I think we're at that stage in the trend too, where the trend is a bit more mature than it was a year ago. But to assume that that's going to stop or that future prospects for this industry group have weakened, that's just not the case from our view. Plus obviously the technicals. I mean, does it get much better than that as far as a breakout, a retest, and a really well-defined level to manage your risk and to work on a position. So really like the charts we're seeing across the board from infrastructure.
And the relative trends for industrials for value right now, I wouldn't say look great, but they look really interesting, and they're at some key levels.
Yeah, I would say so. Like industrials, if we look at the the large cap industrial ETF, like the XLI, relative to S&P 500, it's gone through. It's been ranging, right, for a multi-year period. But to start 2025, industrials are off to a good start, along with their energy cohort. But there's a lot to like about those groups. Given all the headlines, guys, too, over these last few weeks, it's like we have so many industries, sectors, areas of the market that are trading above an upward sloping 200-day average. And I need to just like tattoo that on my forehead, because that's at the end of the day what I'm going to assign the most weight to. These counter trend, moves above an upward sloping long-term average. They have to be viewed as opportunities to add and to really, consider, how well you're managing the risk of your position. But still a lot to like.
Buying corrections in the context of primary uptrends, it's worked forever. Mm-hmm. And still, when these opportunities present themselves to us time and time again, even people who know this, don't want to do it.
Right. It goes counter to, a lot of our base instincts, right? Working in wealth management, we have an opportunity every day to help protect our own investors from enemy number one, which is themselves, right? When they're reading those headlines, when they maybe have read a convincing piece on a certain group or a certain viewpoint of the market, trying to stay the course and ensure that we're doing the next right thing to reach those long-term goals. Yeah, that's what it's all about. I think there's a reason, guys, that this industry, a lot of wealth managers have their own wealth manager, right? That is evidence enough for me that the industry itself and what we do and the value we add isn't going anywhere anytime soon.
You guys are money therapists for a lot of people.
That's so true, Steve.
Yeah. Therapists don't treat themselves. Doctors don't treat themselves. Doctors have doctors.
Right.
That's right.
That's the right analogy.
Right.
Shane, what do you think about? I saw this morning. Money market funds just had their biggest weekly inflow since the throes of COVID, April 20.
What's going on there?
Yeah, I mean, money markets. It's interesting, right?
Like, do you see that kind of thing, right? When you see this fund flow or you hear about this fund flow data, are you then like, oh yeah, I've been.
Well, in the retail community, right?
Yeah.
In the retail community, there are some, and it depends on who your custodian is, your broker dealer, et cetera. But they're going to have a default cash sweep where if you're trading models, that's going to be viewed as a cash equivalent. And moving those funds into a money market is a trade, right? I get it's a cash vehicle, but you have to purchase the money market. So when I see outflows and inflows into money markets, I think that just speaks to the spread between what these institutions are offering from their sweep versus what's being offered through the money market. I think it has less to do with leaving risk assets or heading to risk assets and more about the sweep and the money market.
That makes a lot of sense, actually.
So what Shane is saying, so everybody understands, is such a great point, Shane, is if you leave the money, in the account, in the investment account, it gets swept in many cases overnight anyway to these high yield, ultra short term, whatever vehicles. And then it's back there in the same day. So you're getting what's standard for something like that? 4%?
That's right. So if it's 100% government money market, maybe 4.2, 4.25. But even the prime money market funds that have a bit of the majority government paper, but they may have some high grade corporate. Even those funds are offering 4.3, 4.4%.
That's high. That's solid. So what Shane's basically saying is, once the spread there between what you can get if you actually go and buy money market funds gets big enough, people will say, oh, forget the sweep. I'm going to actually go and buy some sort of, treasury vehicle or whatever.
Well, the implication behind like biggest weekly inflows into money market funds is that people sold stuff, right? They sold some position elsewhere and then took that money and put it into a money market fund. That's how I interpret it.
They moved capital from basically one cash equivalent to another cash equivalent.
That's right.
Is what happened. There's no answer.
The conversations we've had to have with clients is that sweep, and again, I'm speaking from our custodian, that sweep has that FDIC insurance, right? Yeah. The money market doesn't. So having that conversation to explain like, hey, this is 100% government paper. There is no FDIC insurance. However, your counterparty is the highest grade credit on the street. Making sure that our clients are comfortable and understanding of, you have daily liquidity in a money market, but you're going to lose that FDIC insurance.
Okay, so I should not read too much into this ever again, is what you're saying.
That's great.
Yeah,
that's the way I'd look at it. Yes.
Okay, cool. Hey, Patrick is here. Patrick, you want to come on in? I'm bringing Patrick in. What up, Pat?
Hey, what's going on?
Hey,
look at this. We got a couple of Syracuse boys here.
That's right. How's it going?
What do you Syracuse guys think? UConn going to three-peat this year?
Weirdly enough, Shane isn't even really a Syracuse fan, even though he's born and raised here. I don't know how that happened, but I don't know. What do you think, Shane?
It's I'm more focused on this game next week. Notre Dame, Ohio State, national championship. Last time Notre Dame was in the championship was 2013. I was at that game in Miami against Alabama. We got beat by like 4 or 5 touchdowns. Still a very fresh wound, 10 years later. But
you're an Irish fan. You're a Notre Dame guy.
Big Notre Dame.
I didn't know that about you.
Oh yeah. So we're crazy roller coaster season from the Fighting Irish. But
what's the spread? How many points are they getting?
Last I checked, it was like 8.5. But you can't count Notre Dame out. We've been finding a way all year. So
they're hot. They're hot right now too.
Seems high.
They're banged up. A lot of injuries, but you can't count them out. They're going to find a way and they're going to compete. That's for sure.
Shane, is this your first presidential election on the advisory side of things?
So I did, so I was in the industry in 2016.
Okay.
So, have seen the transition, seen how, for instance, like Trump, right? Best performing sector under his first administration, technology. Biden, what did we have? Energy. I love that that's how life plays out, because those are the sectors you would think would be opposite of the administration.
Me too.
But yeah, we've been trading through a few different.
Do you try and tell people? Do you try and tell people stuff like that? Because they don't want to hear it.
That's an important point. So they don't want to hear it, but sometimes it helps to provide a perspective where the area that we expect to do well through a certain type of environment or administration, the market is really out there to trick and fool the most amount of people. So to always be looking at price, evaluating trend, seeing what's working, because those are leading indicators, right? And that's what we want to focus on.
Now, how do you deal with the news flow in this kind of environment, though? Because new administration coming in every day. Every day there's a headline, and stocks move on this stuff, especially right now, right? Because things are starting fresh and changing, right? And they're doing all these new things, and the market's trying to price it in. Are you taking more phone calls? Like, how do you? It's a busier time for market people, not?
It is. It certainly is. What we have seen so far in 2025 is that there have been some clients who are fearful of these next 4 years, right? And being able to have conversations with them and walk through scenarios of how their portfolio would behave in theory if something were to occur, whether it's credit spreads, blowing out, or whether it's Department of Government efficiency, whatever concern they have.
You stress testing them.
That's right. And ensuring and getting back to first principles as far as portfolio management, right? Rebalancing, owning other asset classes other than stocks.
Sure.
Owning assets that maybe aren't going to earn a return that far above inflation, but are adding a true diversification benefit to the portfolio. And really just walking through that with clients and making sure that they're feeling good and comfortable with the decision. We say all the time at Michael Roberts that we can get from point A to point B, right? If getting to point B is our goal, awesome. We could get there, but if the journey is uncomfortable or anxiety ridden, that is not an accomplishment or a success story. We want to get to that goal, but do it in a way that they're comfortable with and everyone's on the same page.
Just out of curiosity, Shane, the people that your clients are talking about, how, generally speaking, how old are they? Because I really can't imagine anyone like that in their 30s or 40s or even 50s, people who are still, a decade or more from retirement. I can't imagine them being that concerned about any 1 4-year period, right?
That's right. That's true. So our clients can range from, those early on in their life cycle and their career, journey, to pre-retirees who are maybe on the cusp of, moving away from employment and
I can understand that. I can understand being 70 and being like, okay, I'm a little bit concerned here. I need this money, right? Like I can kind of understand. I really can't imagine anyone that who's years away from it.
Right. And I do think, looking at the retirement portfolio and the need for capital preservation, trend following, right, is such an amazing way to accomplish that, where there's risk controls in place, your downside, and it's a much more inexpensive way to approach it than some of these complex products out there that, in all honesty, we may not really know what's going on underneath the hood or how they're gaining these exposures. So, trend following, technical analysis, I think it's going to become even more popular inside the wealth management space.
Interesting.
Mm-hmm.
I like that. That's a spicy take. I mean, for so long, it's like the two are oil and water, right? I mean, buy and hold is its own thing, and then technical analysis, that's for short-term speculation. But I think it's really cool how the wealth management space has found a use for it, whether it's relative strength or sector allocation. It's really cool.
It really is. And I like to break it down from we may have a household that has a number of different accounts. Let's just say they're all qualified. It may add a ton of value to the client if they were to carve out a portion that would be traded in a trend following strategy, to where in the event we had this resurgence of volatility, they could look to that account and say, hey, you know what? This account, I'm out of the market. I get I have my buy and hold portfolio, but I can look to that account that is trading based on a moving average or some type of technicals and take comfort knowing that, hey, I'm out of the market. I have cash available. We don't set an expectation that trend following would outperform a buy and hold strategy over extremely long periods. But on a risk adjusted basis for a retiree, there's a huge value add there at preserving capital and making sure that, the hard-earned monies that they've accumulated their entire life are, protected. So a lot of value added, I think.
No doubt.
I'm bullish on the life of a trend follower. Also, I like what you said about like the emotional volatility that you can't quantify, that can come with or will come with being in the market for so long. Like you can't measure that. You can't factor that into your Sharpe ratio, emotional volatility, how you felt almost jumping out a window in a bear. You know what I mean?
That is
so that ride along the way.
Steve, I think a great example of that's like China versus the US last year, right? I mean, China outperformed, but all that was in like a week or two. Yeah. So, you could sit there at the end of the year and be like, I should have been in China. Did you really want to be in China though? Or would you rather have enjoyed, what do we have, a 8% dip or something at most? So volatility is definitely a huge part.
Absolutely.
Right?
And walking through those hypotheticals. And some clients, they need to see a dollar amount. Percentages, I know we're all in the industry, so we think in percentages, we think that way. But for some clients, they need to see a dollar amount where, hey, if there was a 20, 25% drawdown from this account, this is this is in dollar terms, this is what the portfolio would be down. That helps really frame things for them. And it leads to really constructive, conversations.
No, I think that's great. You literally put them there, like scenario analysis. If your account is down this much and this is the new value of it, are you able to hold and sit through it?
Right.
Some people are going to lie or not know until it happens too. But hey,
you can't know. You can't
know. Right.
I firmly believe that. Like no one can tell you what it's like to lose your own money. You got to experience it for yourself.
I think the pandemic was a good lesson for a lot of people too. That was different, right? We have these bear markets, we have these crashes, and they're always scared. There's always like something going on to be afraid of. But the pandemic was like, is the world ending? Like that was a strange one, probably for a lot.
That was a formative experience for everyone that lived through it.
And those kinds of things will keep happening. I don't know if it'll be a pandemic or something else in the future, but you're going to look at it and be like, well, this one's different. This is crazy. I got to get out.
Yeah, and what that taught me was if you have a plan and you stick to it, you'll be okay, right?
Yeah, my plan most times is just fade Bill Ackman, but there's a lot of different processes and systems.
If you were buying when he was crying, you made out like a bandit. So anyway,
hey, thank you so much, man. So good to see you.
You as well, guys. Take care.
Right,
thanks for having me.
All right. Pat, you want to hang out for a little bit? I think we're going to do a recess. Sean is supposed to hop in here in a minute.
I can stay. I have charts to go over. Don't rush us.
I'm not rushing anyone.
Change the morning show.
I forgot.
We're switching.
Okay. Interesting. Fair point in the chat. Because interesting is one of those bullshit words that we all say a lot. To me, interesting when we're talking about the market typically means we're at a level of interest. I don't know if that support holds, right? Or if it breaks, but something might happen here, right? We're at a big level. I'm interested in this reaction, right? Or if we get follow through. Usually at a level of interest, it's interesting. But I'm with you guys. It's a crummy word.
I'm with you there. Yeah, I understand. It's it's interesting, right?
Like it's like we have these things. Cautiously optimistic. Conviction buys. Wait. I don't know. We got a lot of these things. Constructive.
Yeah.
Building a house.
No, there's one I was thinking of the other day. Shoot, what was it? It may have been conviction buy. It was because I was thinking like, conviction buy is that. So what a regular buy, you're just not convicted, right? It's a non-convicted buy. It's like, maybe I'll buy, but this buy, I'm convicted.
But this one, this is the one.
Yeah, right. That makes no sense. Anyway,
raising something to a hold.
Well, that you can understand. You
I
can
saw a
understand
couple of
that.
those last week where it was like we're maintaining this, but we're lowering our price target. You know, we're maintaining this at neutral, but
No, or they upgrade it, but the price target is lower, or vice versa. They downgrade it when the price target's higher. It's like what does that even? How does one interpret that? I don't even know.
Some of these price targets are hilarious. Price targets are fun. I hope they never stop doing them.
I learned far too late that this information is meaningless beyond words, right? But that being said, Steve, to bring this full circle, some of it is interesting, right? So
yeah, it's what do we always say too? Oh, it's going to be a big week. We're going to find out a lot this week.
Yeah, we need
decision point.
We need a like a drinking game, right? Like we used to have a joke back at my last company. Every time anybody on TV would say the word priced in, somebody's priced in, you drink, right? Oh, it's priced in, everyone drink.
Should do like a montage video just mocking ourselves of all the dumb things that we say.
I'm sure we do.
Over and over and over again.
That's okay.
Just like me on here, like garden variety. JC, we're like, gotta see it.
Do you know where that term came from?
Garden variety.
Garden variety? Let's hear it.
I want to hear. No, because I love word history. I love word history.
Etymology, yeah. Oh yeah.
I learned this. Good one. This was discussed a few months ago on Animal Spirits. They talked about this.
Shout out to the guys, Ben and Michael. One of the best podcasts just ever.
And I believe it came from the fact that there was only a very small number of crops that were like the most reliable to be planted in your garden, right? And it was like the same. Everyone had the same 3 or 4 things.
Yeah.
Right. And so
that makes sense.
Where it came from.
Love that. Can I do one?
Please.
I learned the other day, bellwether. Bellwether, a term coined in old agrarian societies.
I knew this.
What are you laughing at, Patrick?
Because you're about to pull a year out of your ass. I could see it.
You're an idiot. The bellwether was the sheep that led the flock. They literally put a bell around that sheep's neck so the other sheep could find it and follow it. Right? He's the bellwether. He's the leader. We use it in that same way for the market for that reason. And we talk about something as the bellwether, it represents the pack or the group, right? It leads the group. So bellwether, shout out bellwether.
Okay, I thought you had charts. I want to bring Sean on, but I thought you had charts before.
I have charts, but this wasn't fun for you?
No, this was fun.
All right. Let's start with the failed breakouts, because I think we've been talking a lot about the failed breakouts and the messy market, right? Over and over and over again, messy market. What does that mean? What are we saying, right? Does it mean sell everything, get out? He's selling Solana. Oh my God. Failed breakout, consumer discretionary. This is a big one. You want these moves to eventually stick. So we have to look at this and say, is it a false start? Is it a failed break? Something like materials, metals, and mining over the past month, they failed break. Huge downside move. Does that happen to these? What's next? Software, big one. You don't want to lose software in the middle of a bull market. Want to see it dig in, hold these prior cycle highs. These charts for now look like they're really failing. It's no good. That's a messy market. If you're buying these breakouts, you're getting smoked, right? Getting stopped out. They didn't work. Next chart. And that's happening in so many groups, small caps, transports. This is the S&P 600. So breakouts are failing. It's been hard to make money on the long side if you're buying these breakouts. However, that's not to say that going out and shorting things, shorting the weakest groups, right, and trying to, sell or short the lower bounds of ranges in these breakdowns, that's working. That ain't working either. So let's look at some of the weakest sectors in the market over the past, 2 quarters, back half of last year. I'm going to start with energy. Okay, this had some sort of double top situation going on when you were to zoom in on it. We test the pivot lows from the fall of last year, a little shake. Energy was at like one of its most extreme oversold readings of all time, I think at least since the pandemic. Explored a breakdown, gave bears a shot. What happened? Absolute rocket higher from there, right? So if you're shorting breakdowns, you're getting smoked on something like energy too. Throw up materials. Actually, do healthcare next. So XLV, same thing. Looks really toppy. It's like a little top, no right shoulder. Extreme oversold reading. Right? So with momentum at these extreme oversold levels, things oversold readings we haven't seen in years. Some of them in history. XLB almost its most extreme oversold of all time. But even on that nasty momentum, They can't break down these chart patterns. Right? So what does that tell you? Healthcare digs in here after making almost new 52-week lows, fails the top at least for now, holds. Throw up materials. This one was nasty. The price action here following the post-election rally was really, really bad. This was the weakest group of stocks. They broke it down below this key level. One more green candle today, and look out. This one's scoring, right? So this is scoop and score. They trapped the bears. They hooked it higher. I think next stop materials back towards 100, right? These patterns are as ugly as they come in this market. The bears had their chance. There's a nasty environment over the past several of weeks. Momentum at, record oversold levels. Can't break these patterns down. Breakouts are failing. Been hard to make money on the long side. Breakdowns are failing. Hard to make money on the short side. It's a messy market. Just to say all the breakouts are failing is telling half the story, right? The breakdowns are failing too. We're rangy. We're trendless.
Wonderful.
Really, what?
I said wonderful. We are in no man's land.
It's a chop fest, dude. It's real sloppy out there.
Well, fortunately for some people, like Sean McLaughlin, he has strategies for choppy markets, just like he does for bear and bull markets.
And we put one on yesterday. I thought the flow show we did yesterday, we got off and I said, Sean, that was a boring show, but it was the right thing to do, right? Because they do have strategies for this. And Sean is the best in the business at making money off of trendless sideways markets.
Let's see.
Morning, boys. I'm officially upgrading the morning show from interesting to exciting.
Oh, that was good. That was clever. Sean,
actionable.
I'm on board. Bills Mafia. Let's go, baby. I'm all in on the Bills. Super Bowl.
Plenty of room on the bandwagon. You want to hop in, Spencer? Come on.
I'm already in one. I can't be in two.
I know Patrick's on board. He's in upstate New York. He has to be. He has no choice. He's snowed in. He has to be on Bills Mafia bandwagon.
We have to be.
Josh Allen is just awesome. He deserves a Super Bowl. I hope he's Super Bowl MVP. He's so fun to watch.
Can we all agree that this weekend's game, the Bills versus Baltimore, is the AFC Championship game?
Probably.
Can't wait.
Yep.
Can't wait.
I mean, whoever wins that game is going to destroy Kansas City, right? I mean, Kansas City is the weakest 16-1 team in the history of one-loss teams.
It feels that way, but then they come in and they win every week.
I know. They win 17-14, and you're like, how they do that?
Yeah.
I know. Now that I've talked shit, now Kansas City's gonna just
all right. Do you want to talk about this FCX trade from yesterday? Is that what we're talking about?
Sure, we could talk about that boring trade. Yeah.
Well, why was it the right trade?
Markets? I mean, the market's ripping this morning, right? Great, awesome. If you're bulls or bullish, you like that. But it doesn't invalidate the fact that, I mean, for the past 3 weeks, basically since the Federal Reserve did their latest, whatever they did, the market's just been up, down, up, down, up, down. No indecision, or just all complete indecision. Nobody's really taking a stand here. No sector is digging in, taking a stand. I mean, and that's not just true in stocks. It's true in crypto. It's true in interest rates. I mean, it's just like nobody has any conviction, it seems, anywhere. And so when we're stuck with a market like this, as frustrating as that can be for a lot of market participants, at least in the options market, we have a way to participate. There is a way to make money. We're not going to hit home runs in an environment like this. We're not going to be putting on the trades that make our year, but we can be putting on trades that, funnel in some income here and there, keep the lights on, so to speak, keep us interested. And, Strazza talks about this a lot. Sometimes we like to put trades on just to have them for information. Because I can only speak for myself, but I know that sometimes I need to have a little skin in the game in a certain area just so that I am paying a little bit more attention to it, right? Like if I don't have a semiconductors trade on, then I'm probably not paying as close attention to what that sector is doing versus if I got a position on. So if I have a position on, I'm looking at it every day, right?
No,
Brian Lund,
that starting position also is a good anchor, right? It's like, even if you buy just one share, it's kind of anchoring it. So like, okay, here I would have bought here, I would have bought a full position here if I was going to, and then you can kind of follow it that way better.
That's something new I started doing this year, but you end up having a lot of stuff in your account. You do too much.
It's a messy room.
Well, there is such a thing as over diversification. We know that, right? But it's just good to have, positions out there that keep you engaged. And a few weeks ago, Strazza and I put a trade on in NVIDIA, and the trade was that this trade's either going to work for us and that's going to be great, or it's not, and that's going to be good information for us because we want to be paying a lot, very close attention to the semis, because we need the semis to break out if this bull market's going higher. So we do these kind of trades all the time. And anyway, this was a long-winded way to say, well, in this market environment right now, the way I'm staying engaged is looking for opportunities to either put on delta neutral spreads, because with a delta neutral spread, it's information if it doesn't work, right? If it doesn't work, it's because a range is expanding. Something is breaking out. A decision on a direction is being made, right? That's information. So we're looking at putting a delta neutral spreads on. We did one yesterday in FCX, metals and mining area, copper. And then the bullish bets that I'm putting them on, but I'm putting them on, I don't want to say cautiously. Cautiously is the wrong word, but I'm putting them on with
cautiously optimistic.
Are you cautiously optimistic about your bullish bets?
No. I'm putting them on in the assumption that they're probably going to take a little while to work. So I'm putting I'm being creative with the trades that I put on in a way that perhaps I can get paid to wait, right? Those are the types of trades that to me make sense.
Right. And what are some of the strategies that you'll go to over and over and over again when you're trying to do that?
Well, my favorite strategy, and it's not the only one, but my favorite one in situations like this, if I'm making a bullish bet, but a bullish bet that's going to take a little while, I like calendar spreads, calendar spreads. So what a call calendar spread is, for those who don't know, what that simply means is you're buying a long dated call, like maybe a call that has 6 months to expiration, maybe longer. But then you're financing the purchase of that call by selling shorter dated calls, usually at the same strike, against that position. And you're systematically rolling that short call month to month, meaning once that short call kind of decays in value, let's say you sold that short call for $1 and now it's trading at 20 cents, you buy that back to close it and then sell the next month for another $1. And you keep doing that and doing that. And if you do that enough times, eventually you get to a point where you have no net cost in this trade of this long call that still has a few months to expiration. And we like to call that a free ride. It's not, it's a different way to get to a free ride, but we love free rides and options, right? If you don't have any risk, if you've already had the option paid for and it's a free ride, that's a great position to be in. That's a position of strength, as I like to say.
I love that. The calendar spread is a good one. And I have a feeling we're going to be talking more about those kinds of setups in the future.
Yeah, for sure. For sure.
And Sean, you mentioned NVIDIA. We did it on a flow show a couple of weeks back. We have the chart here. Is this not like the single best individual stock example of the kind of market we're in? So we like this trade because we're looking at this top and we're saying it's going to fail this top. Fail this top, rip higher. It did, right? Failed the top, trapped the bears, boom, right back to the upper bounds of the range. It took 2 weeks. And once we get there, giant candle, looks like we're breakaway gapping. Jensen Huang is all over the news. He's giving speeches at the CES, whatever, investor day for NVIDIA. They slam it with this bearish engulfing right back to the lower bounds of the range. That's it. That's it.
And the funny thing is, that day of that big red candle there that started this latest slide, when that thing was gapping up that morning, I mean, if you were on Twitter or listening to just any spaces or YouTube video, anything, everybody was high-fiving each other about the semiconductors. Like, here we go, here's the breakout. And look, I felt the same way. I was like, all right, signal, we're getting the signal, bull market back on, baby. And then it just slammed everybody in their face for the rest of the day. And we're continuing lower since then. Interesting. That's the type of market we're in.
They call that candle the Jensen wrong.
Okay. Well done, Strazza. Well done.
All right. On that note, let's do some recess, maybe, and get out of here.
Yeah, I'm ready. I'll just start. and say that I could not be more excited for earnings season. I really, bank earnings really get me going. So I'm here for it. I'll be listening to lots of earnings calls today. I'm going to do BlackRock too, Spencer. Me and Spencer, big BlackRock fans. I got my JP Morgan gear on. I'm all in. I think this the way the banks report, it's always huge, right? Because it kicks it off, starts that sentiment around earnings season. I think we're really set up nicely, right, for earnings to act as a monster catalyst to maybe kick off a new up leg. We got the shake. They tried to break them. Now earnings season, let's see. They come out and they report the right numbers. The market likes it. You're going to get some follow-through moves. Maybe those failed breakouts that we were talking about end up being false starts. And it's go time. Maybe we, have a really nice February, March spring season.
I will be doing absolutely none of that, and that sounds terrible. But good for you. I'm glad someone's doing it. You're smarter than me.
Today,
earnings are great. I think of earnings as game day, right? You only get 4 games a year, right? And earnings is game day. Earnings is when you actually get to see what the hell is going on, right, at these companies. So, especially this earnings season. Because the Q1, I guess, Q4 earnings season, because now we get the annual numbers, right? We get all the year-end numbers from last year, which is exciting. So it's a big.
And I don't think don't underestimate the intermarket landscape. As we walk in, I'm talking about earnings as a catalyst. But go look at the dollar getting slammed here today, right? Down every day this week. Look at interest rates. It's the biggest red candle you've seen from rates in a long time. Those have been the headwinds. So those come off, right? Those headwinds abate. At the same time, maybe we come out and get some really bullish earnings reports here. I could paint a pretty rosy picture about where we could be headed.
I don't know why we're talking stocks during recess, but okay, this is good.
That's a great.
I had
I
had a stock related recess as well. We talked like for 2 seconds yesterday about medical devices, and then yesterday I was watching this new show on HBO called The Pit, which if you've seen ER, you'll love The Pit. Anyway, I'm watching The Pit last night. It's a hospital drama with Noah Wiley, and I see this machine, and it's doing CPR. It's a machine doing CPR, and it blew my mind that this is like a thing. So I looked it up, and actually, slide 20 finds if you can. Stryker makes this. It's called the Lucas. This is a real thing. It's been around for like 20 years.
The Lucas.
Yeah, the Lucas. It's a real thing. It's a machine. It does chest compressions, and I was like, this is the coolest thing ever. Medical devices are so freaking cool. I have to go buy the IHI tomorrow.
I have no doubt that thing started out as a sex toy.
Dude, the robots are coming. Okay. The robots are coming, guys. This is old tech. This is old tech. I can't even believe you're showing me this.
Okay. Bottom line, though, it just reinforced the idea that like medical devices, it's the coolest industry, right? They got the coolest shit going on there. I got to get some exposure. That's the bottom line here.
Hey,
all right.
When the robots come, guys, would you rather them look like humans? So would you rather them be humanoids or like bots?
Humanoids.
Bot looking.
You want them to look like us, Sean? That's creepy as hell.
I'm all in, man. Let's just go all in. Let's go all the way. All right, listen. Here's my recess.
IHI, medical devices. That's my recess.
Hey, speaking of humans, here's something human for you guys. Have you guys ever seen the movie from 20 years ago, The School of Rock with Jack Black?
Yes.
Oh yeah.
Shout out, Larry. I saw that on Broadway, and it was one of my favorite plays ever. It was awesome.
Yeah. Well, in a fit of inspiration, a couple weeks ago, we were looking for like movies to watch with my son. He's 10 years old. It's kind of tricky to we all have memories of movies that we liked when we were younger, or maybe 10, 20 years ago. And we think that they're PG or they're, family friendly or whatever. And then you watch one of these movies with a kid and you're like, holy shit, this is terrible. I have so many examples of this and we won't go down that rabbit hole. But so it's always tricky trying to find like classic movies that we really like. Well, I thought of School of Rock and I put it on for my buddy. And he had a couple other friends they were doing a sleepover at my house a couple weeks ago, put the movie on for the boys and they absolutely loved it. My son thought it was the greatest thing in the world. At the end, when the kids put on their big concert, like it was like a big triumphant thing. My son thought that was the greatest thing ever. And when the movie is over, I told him, I said, hey, they have School of Rock, classes here in Boulder where we live. Like, is that something you'd like to do? And he's like, what? Really? He thought Jack Black actually taught the classes. He's like, is that really?
He does.
I'm like, well, Jack Black's not there, but they do have it. And so fast forward, yesterday, I arranged for my son to get a free lesson at the School of Rock to learn how to play guitar. He's never played guitar before. I mean, we have guitars around the house. He's picked them up before, but he doesn't know what he's doing.
Right.
So I took him to a class yesterday, a free class. He got like a 45-minute session with a professional teacher. And I don't know if it's going to take yet, but I got to tell you, man, that operation they got there is really, really cool. I walk in, they got a bunch of rehearsal rooms. They got a bunch of instructors. They have live band rehearsals going on. And these are all kids. These are kids in I saw kids as young as 6 or 7 walking in and out of there up to like teenagers and early 20s. Like,
how is the class free?
It was free. It was like an introductory class. Like he could go in and see how he could play a guitar, see how it works. And if it's something he wants to do, then he could sign up for classes.
Okay.
Yeah.
That's awesome.
But it was such a cool place, man. It was like really great energy and all these kids who seem to be really into music and they're playing all different styles of music. And man, I was like, I want to take classes here. I want to do this. This looks fun.
So I've seen these all over. This is now like a chain. It's like a music school chain.
I've never heard of this.
Yeah. No, they have them up by you, Spencer.
Never heard of it.
Yeah. Oh, so I see Dawson talking about he's got his friend's son doesn't have a show this weekend. Yeah, that's awesome. That's the thing too. Like these kids, they're all different, but they're generally like 16-week courses. You get a one-on-one lesson each week, as well as a band rehearsal each week, right? And then at the end of the 16 weeks, you get to put on a show on a real stage and like an actual concert venue here in town, and all your friends and family get to come out and see it. And I mean, dude, if I had this when I was, 10, 12 years old, I would have been all over it. This sounds so cool. And I'm hoping I could get my son into it. He's kind of on the fence. We'll see. But there are some shows there. The students do have a show this weekend that we may go and check it out just so my son could see what that looks like, what the finished product looks like. And maybe that'll get him fired up.
I think it's great for kids to learn how to read music, or at least, learn an instrument. I tried to do it. It was terrible. I tried later on in my life too, and just wasn't good enough and was way too impatient. But I think it'd be, it's an awesome skill to have.
Yeah, I agree. So we'll see if we can make it happen. And if he doesn't do it, then maybe I'll do it. Maybe I'll take classes with the kids.
Just do it with him.
Oh, that's not a bad idea either. Yeah.
That could be fun. All right, Pat, you got anything?
Don't really have anything for markets are on my mind. I'm looking at the 10-year. I'm looking at that candle. I thought that was a great point, Steve. You mentioned about that candle in the 10-year. I mean, that 4.7 level has been so important, and that looks like a failed breakout. So we'll see if it sticks, but important one.
Hey guys, we're going to learn a lot this week.
For all the talk in the dollar, I mean, it's really it's yields that's moving the dollar.
Mm-hmm.
So it's really about yields. That's.
I heard you, Steve. I heard you, Steve. I got that joke.
Sorry to bring it back to that, but
we're gonna learn a lot this week.
It's gonna be an interesting week.
A big week with some interesting levels out here.
Steve said himself, big week for earnings. He's not wrong. All right. No show tomorrow. We're gonna be off. JC's out of town. I'll be on a flight as well, so we'll be back on Friday. And on Friday, we will discuss. Let's take a look. Where's my calendar, Alfonso?
Where are you going?
I'm going to Minneapolis, man.
Why?
Great question. Friday,
Minneapolis in late January sounds wonderful.
Dude. I know. So I'm going to visit some family. So funnily enough, I was looking at the forecast, and tomorrow they're going to be near their record high. It's going to be like in like high 30s tomorrow, which is like a near record high for them. And then by Saturday, it'll be in the single digits. So near record highs tomorrow, single digits on Saturday. It's going to be fun.
Yeah, we got a big cold snap coming our way in the next couple of days. So you'll be part of that.
Be great.
It's freezing here.
Yeah. Thursday. Friday we'll be back. We'll talk about what earnings do we have? We have some more financials. We have JB Hunt. That's kind of it.
And we're off Monday. It's MLK Day and the inauguration.
We are off Monday, but we are going to be doing a stream on Monday, not in the morning. We're doing an afternoon. I don't know what you want to call it. Inauguration Day stream.
Maybe you are.
Yeah, JC and I are. Yes, that's correct. We're going to be talking about the markets, not so much the inauguration. We don't really care about that, but
inauguration day volatility.
That's right. So we are doing a thing Monday afternoon. that's a long ways from now. We'll see you guys on Friday. Smash the like. Thanks, Shane Murphy. Thanks, Sean. Thanks, Pat. Go make some money, all right?
Later.
I can't take no loss. I don't even know what it